So you want to know how to make money when the stock market goes down. Well, in this video, whether you're an advanced trader or just a beginner, you're going to get an overview on how short selling works, why it's useful, and how to do it to profit when the market drops. Yes, I hear all the time, stocks just keep going up and up and up, and that's great. But how do I make money when they finally do pull back? This is the ammunition that you need, the skills that you need to do that when you go to short sell. So what's the process? Number one, when you are short selling, you start the trade off by borrowing a share or shares from your brokerage or trading account. What this means is you sell to open this position. Your brokerage gives you a share, let's say, of a company, XYZ in this example, and you would then go and sell it to open on the market. Let's say again for $100. So one share sold at $100 means you get $100 in your trading account. Now, there'll be a small fee from your brokerage to borrow that initial share, somewhere between roughly 2 to 5%. Now, here's where it gets interesting. Normally, when you're buying and selling individual shares of a company, when the price goes up, you tend to make money, depending on how long you held it for. But with short selling, or shorting as it's known, you make money when the stock goes down in value. Meaning, when you sold your initial share for $100, you want the price of that stock, which was $100 at the time, to go down to 90 to 80. As low as it can possibly go, the lower it goes, the more money you make. And once it goes low enough to your targeted area, you can then buy back your position or cover your short to close up the trade and realize some profit. So in this example, again, you sold to open at $100. The price of the stock went down all the way to $60, let's say, which means you have $40 roughly of profit, give or take a few bucks, because again, you have to pay your brokerage to borrow those initial shares, and there's commissions for your trade. You're gonna have around $40 worth of profit in your trade when you buy back to close your position or cover your short. Now, why do people do this? Basically, it comes down to two things. Number one is greed. People want to be making as much money as possible all the friggin' time. So when the market comes back down and drops, it's just another opportunity for them to go and say, hey, I'm going to make a few bucks. In reality, it's better used as a hedge or a protective kind of strategy for protecting your overall account size when the market does decide to pull back. Now, in a moment, I'm going to share a shorting trade that I made in my own account. But before that, this is the biggest risk when it comes to shorting. When you are shorting or short selling, you need to understand if the price of the stock goes up, you lose money. And because prices of stocks can infinitely go higher, there is no cap, theoretically, on the amount that you could lose when shorting a stock. What I'm trying to say is that your losses are uncapped unless you use a stop loss and protect your risk in the trade. When you do this appropriately by using a stop loss, your losses are capped. When you don't, then you're opening yourself up to unlimited theoretical risk, meaning that the stock price could go from 100 all the way up to 200, 400, 1,000, 2,000. It may not ever stop in theory, a la a GameStop or an Nvidia, as we've seen recently. If this were to happen, this would be crushing for your account. You would get what's known as a margin call if the stock just shot up and you got this wrong and you didn't have a stop loss or a way of closing the trade automatically once a certain price level is hit. So now let's jump into my trading account and show you a recent trade that I put on shorting shares of Costco. Now you may look at this chart and say, well, Andrew, Costco's price has been on a really, really strong upward trend. Why are you shorting them? And I would say, stupid is as stupid does, sir. But in reality, I just think that it's been on an extended run higher. I think the market and Costco itself are poised to pull back. I have my own reasoning based on technical analysis. There's some Bollinger Band interpretation here that I don't like, that I think is just, it's primed for weakness. So I'm taking a short position. And if you don't agree with me, that's your business. And I'll show you the mechanics of it inside Interactive Brokers in a sec. But inside my TradingView account, I was doing some TA and I got in here and said, hey, my number one area right here is around 844 and change. So I sold my short right there. And as you can see, it closed just a bit higher than that. So I'm currently down a few bucks on this trade. I put 50 shares into this trade. So I'm not super heavy into it, just to kind of try to see where it's going to go and see if I'm right. But I do have a stop loss right up here at this level, 853.90, and I do have a profit zone at 826 and change down here based on some recent kind of support and some large candle movement and just a upward trend of what I'm willing to lose in this trade. Because I have 50 shares of this going on, I've shorted 50 shares of the stock. When we calculate our potential loss, we take our stop loss at 853.90, subtract the short where we put it on at 844.71, so minus 844.71, and we get a total of 919 we're going to times that by 50 because there's 50 shares in play on this trade. Meaning I'm willing to lose $460 on this trade, but I have a potential gain if it goes in my direction based on my TA. Again, 459 is my potential loss. But if we go 844, where I sold my shares, and subtract 826, 1870 times 50, 50 shares, 935 and change. So I'm willing to risk 450 to make 950 and change, or 935 and change. So it's almost a 2-to-1 ratio in terms of the trade. And so that's a good trade for me. I'm going to take that and run with it and see how it works out. Again, you may feel differently, but feel free to trade in your own manner. But the key here, again, back to the risk part of it, is that having this stop loss protects me from losing more than I need to. Costco's price has been going up higher. I'll give you that. It's been in a great uptrend. I'm banking on a short-term bounce, but if it does keep going up to here and up to here and up to here, well, my losses would keep getting worse and worse and worse to the point where I'd have my account closed down, which is why it's so critically important to understand when you're shorting, have some kind of stopping mechanism, have this trade already attached to your order. I did it through a bracket order inside Interactive Brokers. Put this stop loss order on after you make the trade to protect your risk and do not blow up your account. So to actually make this trade inside Interactive Brokers, all I had to do was go and click on Costco right here. As long as you're having a margin account, you're gonna be able to do this as well. I'm going to go sell to open, right? And I'm going to have a quantity in here of 50. Just going to scroll down to it there if I can. Can't, so I'm just going to go 50 like that. I always like to use limit orders when I'm doing my trading. And I always like to use the mid price. It's not going to be shown right now because the market is closed, but we're going to take the current price of 845.58 and we'll just put that in there, 845.58 for the current price. Day was going to be good. And then instead of just clicking submit right away, what I did, I clicked advanced right here, right? And I went down and I went attach stop loss profit taker bracket. And I put in my stop loss by clicking this button right here. And I have a stop order in there now to protect my downside risk. Again, that stop order price, we'll just flip back into trading view, 853.90. Okay, going back into brokers. And we just say 853.90. We're gonna have this on good till cancel, which is a pretty important step right there. Make sure it's GTC so that it's always gonna be on. If it's only day, it's going to delete and not be in play after the current trading day. So make sure you're GTC. I don't need a profit taker because I'm going to manage it myself. I would just still go then hit submit. And I would override and transmit my order. And now you can see down here in the actually order area, you're going to have a sell order and a buy order attached to it. You can see that this little kind of arrow over here means that the stop loss is attached to Costco. And in the chart there, you can see as well, we've got a stop order in there, it's a green line, and we've got a sell order in there as the red line. We get a little bit closer and you can see a bit better. It is a bit of a tough one to see inside Interactive Brokers, which is why I use TradingView for my charting. So there's a quick snippet of the trade inside my actual account, down about 40 bucks right now, but I do have that stop loss attached to it. So I'm not really gonna be monitoring this one moving forward, only on the profit side. The downside is protected and it's gonna stop me out where it's gonna stop me out at. If you guys want to know how to sort your account on Interactive Brokers that way, your portfolio, you can do it by stocks, shorts, expiration date. Check out this video right here. Otherwise, my name is Andrew Ferguson, and I teach investors how stock options work using the Interactive Brokers trading platform. Subscribe to learn more, and thanks for watching.